morning?
I'm fantastic, John. How are you?
I am doing well here. Nice, beautiful weather Wednesday morning in the Williamsburg area. And I'm thrilled that we get a chance to have these conversations on Wednesday morning. So thank you so much for joining me again here. I may have an interruption here in a second because usually that'll come in and blast my audio. But hey, listen, there's a lot of great stuff happening out there. It's a little crazy world. I had somebody that I was working with yesterday. We were writing a contract on a home. We're writing a contract on a $725,000 home that just dropped out of contract.
Wow.
And like it was to no fault of the seller, but a little tough to talk about this situation, but buyer had actually lost their job.
Ouch.
And so I'm working with another buyer that really wants this house. So the question that the buyers has in their mind is, hey, prices are going down. They're hearing all this information about prices declining. And the reality is that is not happening in this market. There are some markets around the country where there's some pressure. If you look at some of the markets where this happened, in some of the areas of California, Austin, Texas, some places in Idaho, where there was double, tripling of home prices in a very short period of time. Some of those prices were just extraordinarily out of scope of any market reality. Here in the Williamsburg area, our prices have continued to rise, but our inventories are still very, very low. Sorry, jumping in right into this because this is just kind of like what's right in my face with this particular deal that we're trying to pull together. I think we're going to make a pretty good deal on this house now that we have an opportunity to make this offer and get this thing to come out. I'll share more hopefully as it kind of evolves. But it is still a market where sellers have a great opportunity to sell their home. But the beauty is buyers are having more opportunities to get into a home now as well. So I don't mean to convey a negative message. This was very negative that this contract dropped out, but it was nobody's fault. Buyer lost their job. But one of the things that is very real about this market is it's still out of balance. There's opportunities more now for buyers than we used to have, but there's still a lack of inventory of homes. Home prices are continuing to rise. I did a market thing the other day, and I'll be doing market analysis stuff weekly for people if they want to see that. But today we're going to talk a little bit more about mortgages. And I think the reason I wanted to talk about that was because of the increasing prices that we're seeing in our market, which are looking like they're going to continue. You just sent me an email, didn't you? You just sent me an email that actually is, yep. Let's see.
It reinforces exactly what you were just saying.
Right.
Most of the market experts have revised their home price forecast for 2022, increasing expectations for appreciation.
Right.
So yes, the forecast is for continued appreciation, not quite as much as we had seen over the last 12 months, but yeah, home prices are stable, solid, and still increasing because just basic supply and demand.
Yeah.
The article is quoting Bankrate saying, after all supplies of homes for sale remain at near record lows, a jump in mortgage rates has dampened demand somewhat. Demand still outpaces supply thanks to a combination of little new construction and strong household formation by large number of millennials. So basically, they're saying lots of millennials coming into the market, need a strong need for rental and purchase properties. So that's just pushing prices higher because there's more people looking to buy and rent than there are houses.
Yeah, and I'm sharing on my screen right now. I don't know if you can say that, Kevin, but I'm sharing on my screen right now the email that you sent me, which has come from List. This is from the Keeping Current Matters, which is a great resource, great resource for professionals. It's a great resource for home buyers and sellers too. Many experts raise their home price forecast. This is looking at January's expected appreciations in these markets. And then now we actually are knee deep into the August of the year, and we're looking at our actual appreciations are significantly higher than what they were projecting earlier this year. And that's in an environment of inflation, in an environment of rising interest rates. Now, I say rising interest rates have not shot through the roof the way people and experts were projecting. The sky is not falling the way some experts had projected. Interest rates are settled back down again these last couple of weeks. They spiked up in June and now they've settled back down. This is a great time to be getting a mortgage because
we did hit some highs in June, but yeah, things are at a normalized level now. You can get into the fours, upper fours, maybe even low fours for a veteran on a VA mortgage. Upper fours to low fives for most other programs, unless you have some challenges and such. So no, it's actually a really good time to buy. And if you look at home affordability as through the big picture, so sure, home prices have gone up, interest rates have gone up from the pandemic, which they were just artificially low, but so have incomes. So incomes are actually on pace with housing affordability increases. Now, everything else has gotten expensive. Go to the grocery store, we certainly know that hurts more than it used to. So, at the end of the day, we're all facing more coming out of our pocket. But if you're just looking at average home price and interest rate and monthly payments versus income, housing affordability is about the same as it was a couple years ago.
Intriguing point. Intriguing point. I encourage my buyers to know what they're doing and to really be educated about their process and understand what their needs are. And that's part of what a real estate agent should help you do in your home buying process. They should understand your needs, really understand what your objectives are with your life, and be able to help you find a home. Not just a home, it's the neighborhood. When you're buying a home, you're buying a life. You're buying what that home offers, the features and the bucket of benefits that home can offer you. Hey, I would love to hear a little bit more, Kevin, about affordability. And one of the key things that I think is really important for a buyer, particularly first-time buyers, if they're interested if they're listening to us talk, what are some of the key criteria? What are some of we call them ratios, I'm blanking on the words here, but what are your ratios, your qualifying ratios that you use, and what do they mean?
Yeah, that's a great question. When we are working with someone getting started in the purchase process, we're working what we call a pre-approval, and that's an initial look at primarily two things. Number one is credit. So we do take a look at someone's credit. It doesn't have to be perfect. We just want to see, in general, they've borrowed some money, paid it back reasonably well. What's most important is what happened in the last couple of years, and affordability. Affordability is a big one, and we're looking to make sure that the new mortgage payment will appear affordable. So we're going to look at your current income. We can use, of course, regular employment, any income that generally we would expect to continue 3 years or more. So if you have, disability income, any sort of fixed income, retirement, there's all different income types we can use, and how exactly we do it depends upon the mortgage program. They all have their different rules. And then we look at bills. Bills is primarily what shows up on credit, like credit cards, car loans, that type of thing. Other big things we'll take into account is maybe alimony, child support. That's a significant one, but we're not looking for utilities. We're not looking for, your cell phone bill, stuff like that. And then we're just making sure that mortgage payment appears affordable, and the guidelines are different for every mortgage program. We do look at that thing called the debt to income ratio. It's your bills versus your gross income before taxes and insurance and everything come out. And as a general guideline, you want to have your mortgage payment, your new proposed mortgage payment, of about a third of your gross monthly income. That's just a guideline. We can go higher than that. And your total bill, so that's your new mortgage payment plus the other stuff, credit cards, car loans, etc. A good benchmark is having all of the bills about 45% of your gross income, but we can go higher.
Depending on
especially on some of the government loans. FHA and VA are more aggressive. We can go 50%, even 55%.
wow.
A great loan program from the USDA, U.S. Department of Agriculture, same people that certify our beef in the grocery store. They have a rural housing mortgage program with no down payment. They're more conservative on that debt to income ratio, on that affordability calculation, because if you're not putting anything down, they
Right.
want to make sure it's something that's going to be affordable for you. So yeah, and most folks end up being surprised at how much we can pre-approve them for. I had somebody call yesterday and we were chit-chatting, and he works for the shipyard and made $80-some thousand a year and was looking for a home in the 350s. And I was like, easy peasy. Long as you don't have crazy other bills, if you're making 80,000, 350, 400, 450 is very likely doable. Again, depends on what other bills you have, but most folks are usually surprised at how much we can qualify them for.
That is awesome that you had a chance to talk about that, Kevin. I know that some of those ratios, and there's a lot of stuff you talked about as far as expenses and debts that can be a little confusing for people. And we want to simplify it for them. You simplified it really well by explaining that, debt payments are what is really looked at, because we have other expenses like your cell phone and other kinds of things, but the bank doesn't look at that as a debt obligation, because you can stop that at a certain point. And it's unsecured anyway. So but the debt to income ratio is a very important one. So you got a front end and the back end, right?
Right.
Is the
Front end is your housing. That's your mortgage payment. We said, just a goal is about a third, but we can go higher. I've seen them
about a third, okay,
40-45% on that front ratio. A lot of it just has to do also with overall affordability, because if you're at a debt to income ratio of say 45%, but you're making $2,000 a month, very different than someone making $10,000 a month,
right?
Because of what you have left over for cell phone, groceries, etc.
Right. So your income and the level of income certainly affects what you're going to qualify for. It's very interesting. I've got a spreadsheet that kind of does all these calculators. I got calculators for this cool stuff on my website too, where people can actually look at their mortgage payments and all those kinds. I'm sure you've got some things like that too.
And we're not trying to be mean. We want everybody to get a great house, but we also want everybody to be a successful homeowner. So we follow the mortgage guidelines, but we're going to talk people through it. So if I say, hey, John, great news, I got you pre-approved for a mortgage payment of $4,000 a month, you may be like, oh, whoa, you're crazy. I'm only comfortable with half that or whatever it may be. And then we can help you shop in a comfortable price range, because we want you to be comfortable. We don't want you to be miserable the first of the month, every month when that mortgage payment comes due. So it's got to be a good fit. So right. Yep, we can pre-approve you probably higher than you expect, but we're also going to work together to make sure that it's something that you're happy about. You're going to be happy about it a year from now, and you're a successful homeowner.
Yeah, I think that's so important. What you just said right there is we want to be able to, I know that's your goal, that's my goal. We want people to be able to be successful as a homeowner, because this is a life dream that a lot of people have. And the thing, the beauty of this, of what we can start here with a conversation like this, is helping people understand that, yes, there's a system, there's a process, there are numbers that are involved with it, but don't be afraid of it. I think a lot of people get to be surprised at what they're actually able to do once they get into this process, talking with you about what they can qualify for. Just because they can qualify for that $400,000 house doesn't necessarily mean that's what they should do.
Right.
They need to have that plan of what's their life going to be, what's the future going to look like for them. And we can't always know, right? We don't know necessarily exactly what things are going to look like 2 or 3 years from now, but you want to be able to make that smart choice so that whatever your plan is, because if you're planning on buying a new car, you're going to need a new car. Don't do it while you're trying to buy a house.
And that's what happened in the early 2000s.
Sorry,
Late 90s, early 2000s, everybody wanted more. We pre-approved anybody for anything. You could fog a mirror, you could buy whatever you wanted, and equity kept going up, prices kept going up, lenders just gave them whatever they wanted, and then all of a sudden, people are getting hit with these huge payments, especially on some of the less than honest mortgage programs that were around back then. And then people just became like, they had payment shock. And there was a great commercial years ago, I don't know if you remember this. It was some guy like out cutting his grass in front of his big house, and it said, "Hey, Tim, you've got the perfect huge house and great car and a boat and jet skis. How do you do it?" And it's like, "I'm in debt up to my eyeballs." That's just not a good way to live.
I remember that. I vaguely remember that commercial, and it's it's not a great way to live. Being in debt is not the way to go about life, and that's not what we're advocating. But in order to buy a house, typically a mortgage is involved for most people. It's a smart way to do a home ownership, and it's a great way if you plan it right. I know Dave Ramsey, who I love. Dave Ramsey. He wants to see people getting 15-year mortgages. I love the concept of getting 15-year mortgages. What I love even more is getting a 30-year mortgage and paying it off in 15 years, making higher payments on your mortgage so that you can pay it off sooner. I love the 15-year because if you can qualify for it, you get a better interest rate. But if you do the 30-year and make those additional payments, you can also pay it off sooner. There's lots of strategies financially to make sure that you're getting your home taking care of your life so that you can have the life of your dreams. And Kevin, you know what? This is why I love talking to you, because you have a heart for serving people, and we want to have people be able to achieve their dreams of home ownership. And here in Williamsburg, there are so many opportunities. This is a great place to live. Hey, I was downtown this past weekend. I think you saw that. We had Second Sundays in Williamsburg, and I hadn't had a chance to get down there in a while. And Second Sundays was going on because second Sunday of the month. Yep. And oh my God, the weather was absolutely fabulous, and there's all these artists and crafts people and shops and things like that are out there. And then there's this guy that's juggling, and he's juggling knives. I walked up and he was juggling knives, and I was like, is this really going to happen? And oh yeah, he starts juggling knives. He said, if you clap louder, you're safer. You're safer if you clap loud. That was so funny. But there's great music going on. So we have so many things in this community that are here, and whether you're living in Williamsburg or in the surrounding area of James City County, York County, or anything like that, there is so much to do in this area. It's definitely a beautiful place to live. And guess what? That is partly why our home values are continuing to people are coming to this area. There is a net growth of population that comes in here. Our economy stays very stable. All right, we could go on and on forever, but you've got a busy day. I've got a busy day. We've had a lot to share here with folks, and I hope that they will find that this is very helpful information. Thank you for sharing that. And we'll keep these conversations going, helping to educate our folks out there in the Williamsburg area as we keep on doing this. So thank you so much for that.
Yeah, and I think I forgot to mention, since we last chatted, I had a bit of a personal incident. I accidentally drank invisible ink.
Yeah.
And I had to wait I had to go to the hospital and wait forever to be seen. But
that was because it's invisible. Of course. Well, I've had this kind of crazy issue with my computer. And whoever stole my Microsoft Office, I will find you. You have my word.
Ah, that's a good one. I like yours better.
Hey, thank you for that. That's a good way to conclude this. Hey, so today's August 17th. If you're out there in the world, listen, if you have any questions about mortgages or real estate, call Kevin or myself. Kevin is our mortgage expert at Alcova Mortgage, and he is here to help you walk through anything you need with a mortgage to purchase a home. Whether you're in Williamsburg or anywhere here in the area, please reach out to Kevin for any information. Listen, we're here to answer questions as well. If somebody calls us, we're going to be there to help them. And I think that's what we want to make sure that people understand is we're here to assist with achieving your dreams out there in the real estate world. So thank you, Kevin, for your time. Look forward to chatting with you again. Have a great week, and I'll be in touch real soon.
Awesome. Thanks. Have a great week.
All right, you too. Thanks a lot. Great day. Bye.